Well, there was very little on kind of capital taxes. There
Very
was a
little.
there was a little more for the corporates, on corporation tax, and for companies operating within Ireland. Obviously, the budget came on foot of the very recent announcement that we were signing up as a country to the kind of OECD. Led 15% corporation tax. So that's kind of a headline in itself. But I suppose it was reassuring again to hear it reiterated that really the 12.5% corporation tax will indeed remain, for the vast majority of companies operating in Ireland, and that unless your turnover is over that 750 million mark, which, in 90x% of cases it isn't, well, then it is the 12.5% remaining. And with a few days of that announcement coming out and a bit of perspective starting to come into the conversation, I guess, now, ironically, there might be more certainty of the 12.5% tax rate
Yeah.
than we thought we had, I guess, for the last number of years, because we're all aware of the pressures Ireland was coming under to look at that rate. But there were some other moves, I guess, and changes for corporates. There was what was welcome. There was a tax credit for digital games introduced.
Yes.
So that's something new, and something, I guess, designed to encourage employment in the digital arts sector. And it works by way of a kind of a refundable tax credit of 32% of your spend on projects that are designing, producing, and testing of games. So like there's max project limits of 25 million and various rules around it, but it does seem a good stimulus and give impetus to that section. In another relief that was kind of adapted and extended was the EIS, Employment Investment Scheme. So that, it's quite a popular scheme, and we're all, well used to people looking at this as an option for fundraising. But it's nice to see that, they have widened the kind of qualifying company criteria to include more type of investment funds that might then invest in EIS type companies, and also getting rid of the 30% expenditure requirement that was there. And we know from experience that, at a minimum, it was an admin headache for startup companies having to track that expenditure and make sure it was spent within the 2 years. There was also an extension to 5-year period from 3 for startup company relief for corporation tax. So again, I'm sure you've seen a lot of companies in their startup phase, really avail of this corporation tax relief, and nice to see that extended as well. But just two other ones, just on the corporate before we move off, some of the two kind of heavier pieces on it was there was an introduction of an interest limitation rule. So this is, again, kind of tied to our commitments under the anti-tax avoidance measures that as a country we've signed up to. So whereas the 12.5% rate, or the 15% rate, I should say, applies to companies over 750 million, in fact, this limiting of the interest deductibility, linked to 30% of your earnings for the company. There are no de minimis limits, no thresholds to be applied. So in fact, it's far more wide-ranging than you might expect. So I think that may apply to companies where using debt to finance their operations. So I think we'll see a lot more focus on that. Once the finance bill comes out and we get into the practicalities of it next year and beyond. And there was, again, probably minority sport in terms of anti-reverse hybrid rules. Again, in essence, looking at companies and groups who use different jurisdictions to find kind of tax advantage, and seeking ways to eliminate that advantage by a company or an entity being deemed to be transparent perhaps in one jurisdiction and opaque in another. So for those transparent type entities in Ireland, once this is enacted, they'll be subject to corporation tax. So it'll be interesting to see what companies do. in that regard in terms of restructuring or what measures they'll take going forward.